I read through most of this 55-page report. I have a lot of highlights going on. But the first fact out of this, surprisingly, global household wealth is slightly above the level at the start of the year. How is that, given the economic just fallout from the pandemic?
So really, it is explained by what financial assets have done. In global wealth, financial assets in many countries play the overwhelming part. And the help of central banks and of fiscal authorities to stabilize financial markets altogether, among the many other objectives of these programs, have helped financial assets to recover. And that's what is explaining the steadiness of wealth.
Nannette, the one thing that struck me, last week, Anne-Marie and I had the head of UBS Wealth on, and he talked about wealth growing by over $800 billion. You say that there is no firm evidence that this pandemic has favored the higher wealth, has systemically favored the higher wealth over the lower wealth. Is that just because we don't have all the data? Or are we misinterpreting? Quoted markets are higher, the rich get richer. What is it that stands that evidential fact up?
So there's a couple of things to realize. For sure, we don't have yet all the detailed data available, but those preliminary ones that we are having are showing that there is no firm trend in wealth distribution within countries. We will see how this continues to develop. It's very important to see how labor markets are going to continue to develop, because this is then impacting savings within countries. But what is the second important takeaway is that, of course, wealth distribution is not only how wealth is distributed within a country, it's also how wealth is distributed across countries. And there we have seen more shifts, and it has all to do with exchange rates. Because when we are taking wealth and comparing it all on one basis, we are taking one base currency, it's the US dollar. So for those countries that have seen their currencies depreciate against the US dollar, there is a wealth effect. People are less wealthy in dollar terms in those countries, and this is what has this is what we have seen already, shifts across countries.
And you talk about this in page 33. You said there will be an unusually large number of new millionaires and an unusually large number of new ex-millionaires. Does that have to do with currency exchange, or do you see a shift in terms of where wealth is moving in and out of?
No, this is really to do more with sectors. We have all seen that some sectors, and if you see in what areas some of the new millionaires that have emerged are active, oftentimes you will see e-commerce, for example, pop up, while some of the sectors, for example, that have to do with retail or have to do with classes that are more cyclical, they have seen ex-millionaires. So it's really how the pandemic has affected different areas of the economy that is explaining this practically in all countries, these mobility across sectors by the wealthy.
Is there anything in this report that talks about proclivity for risk or taking risk or becoming more risk averse or a generational shift, Nannette? You talk about the millennial generation and minorities, but is there anything about risk taking that you can tell us that's perhaps going on?
I mean, what we have seen is that, as usual, when there is a period of high uncertainty, people tend to have more cash holdings. So we have seen already also in the data material that the flight to the safety in the face of uncertainty, I mean, a lot of people have been losing their jobs, etc. This is what we have seen, and you could say this is people becoming a bit less risk-taking and more risk-averse. But it can also shift really quite quickly once this uncertainty is ebbing away. And certainly the help that governments and central banks have provided is also, in some sense, stabilizing behavior of households.
Nannette, when it comes to the countries, you say USA, challenging times. China, keep calm. But the UK, it's a perfect storm. Anything the United Kingdom can do to turn this around when it comes to household wealth?
I mean, in the UK, what we have thought is the perfect storm is the fact that financial assets have come down, like in many countries in the first quarter of the year, but they have not really recovered to the same extent. So wealth in the UK has been impacted by how the market has moved. And then also the currency has played a role. So I suppose that if we have really the chances of eventually a deal, despite all the tensions between the EU and the UK, there might be still further recovery of the pound overnight. We have seen how quickly this can go, and that will be a mitigating factor helping to restore wealth. So really, the two most important points are to make sure that the economy does not fall off track. Secondly, is that all conditions are given that markets can recover to the same extent as the rest of the world, and that the pound is recovering as well.